Every year, states administratively dissolve huge numbers of LLCs, and most owners never saw it coming. Not because their business failed, but because they missed a form that costs as little as $20. One skipped annual report, a franchise tax notice lost in the mail, and months later the state quietly shuts down the entity, taking the liability protection with it. Forming an LLC is a one-time event. Keeping it alive is an annual job. In this video, I will explain annual reports, franchise taxes, the wild differences between states, and how to build a simple compliance calendar so your business never dies of paperwork. This is general education, not legal or tax advice, so verify your state's exact rules. Here is the mindset shift new founders need. Registering your LLC starts a relationship with the state, and the state expects to hear from you regularly. Two recurring obligations dominate: the annual report, which keeps your information current in the state's records, and the franchise tax or annual fee, which is essentially the price of keeping your entity alive. They exist in most states. They arrive on the state's schedule rather than the tax season you expect, and they apply even if your business made $0. An annual report sounds intimidating, but it is usually a short online form confirming basics: your business address, registered agent, and management. Filing fees commonly run from around $10 to a few $100 depending on the state. Some states want it every year, others every 2 years, and due dates vary wildly. Some tie it to your formation anniversary, others set one fixed date for everyone. The information takes 10 minutes to submit. The consequence of skipping it, as we will see, is wildly out of proportion to the effort. The franchise tax is the one that offends people because the name misleads. It has nothing to do with owning a franchise. It is a fee for the privilege of existing as a registered entity, and in several states you owe it even with zero revenue. The structure varies. Some states charge a flat amount, others calculate from revenue or net worth, and many states charge nothing at all beyond the report fee. Knowing which type your state uses should be part of choosing where to form in the first place. A few real examples show the range. California charges LLCs a minimum $800 annual franchise tax, profitable or not. Delaware LLCs pay a flat $300 annual tax each June. Texas has a franchise tax, but exempts businesses under a revenue threshold in the millions, so most small LLCs file a simple report and owe nothing. And some states just want a modest report fee. The lesson: never assume your obligations based on someone else's state. Look up your own directly on your Secretary of State's website. Miss a deadline and a quiet countdown begins. First come late fees and penalties. Then your LLC loses good standing, which can block loans, contracts, and business licenses. Keep ignoring it and the state administratively dissolves your company. Your liability shield evaporates, your business name can be claimed by someone else, and in some states, contracts and lawsuits get complicated because your entity technically no longer exists. Reinstatement is usually possible, but costs more than compliance ever would. And in the meantime, you may have been personally exposed. The fix is boring and effective. Today, look up 3 things for your state: annual report due date, franchise tax due date, and amounts. Put each in your phone calendar with 2 reminders, one a month early, one a week early. Add your quarterly estimated taxes and any license renewals while you are there. Most registered agent services also send reminders, a genuinely useful backup. One warning: watch for official-looking mailers charging inflated fees for certificates or filing services you do not need. Real notices come from your Secretary of State, and filing directly is always cheapest. Let us wrap up. Your LLC has recurring obligations, an annual or biennial report to keep records current, and in many states a franchise tax owed even at zero revenue, with California's $800 and Delaware's $300 as famous examples. Missing them triggers late fees, lost good standing, and eventually administrative dissolution of your liability shield. The defense is a 10-minute compliance calendar with early reminders, filed directly with the state, ignoring scam mailers along the way. This is education, not legal or tax advice, so confirm your state's rules. If this keeps your LLC alive, subscribe to Founder Filing and grab the free resources in the description.